All right, everybody, welcome back to the HPT Live weekly webinar where we break down the week, we break down our strategy, we break down, the tools that we use to get in and out of the market. This was a really good week, really good week. Short week due to 4th of July, but still tons of valuable opportunity. And that's really the purpose of these webinars is to figure out what's working, right? Figure out how our strategy is doing, figuring out what other tools we've been using. We've been using the ORB, right? So I want to talk about the ORB. The ORB actually did really well this week. What was it? 3 out of 4 days, the ORB was extremely successful. So I want to talk about ways we can implement that. I think the ORB is a great tool. I'm currently conducting a new study with the ORB. And the way that I'm doing it is I'm actually just implementing it into our previous study that our recurring study with the HPT cross, right? So you'll see that in the high level summaries. And what it is another tool we can use to confidently get into positions, right? See, when it comes to data, right? Well, trading's a really cool and unique thing, right? In the beginning, you're just like kind of going off gut feeling, right? Oh, this looks good. This feels good. Let's take advantage. And then when you cross over from gambler to trader, it's because you start making decisions based off what works most often, okay? And that's the whole philosophy over here at HPT. What works most often? How do we know it works? The data. And then how does that help us with execution, right? So a lot of good days this week. Monday was not a good, really trashy price action, but this is the nature of the game, right? So I want to talk about the 2 trades that I took, and let's break right into it. So we got a very large gap up following last Friday's beautiful price action. Look at last Friday. Last Friday was just glorious. But coming into Monday, we got a very large gap up. Let me get rid of these. I was just on a one-on-one with somebody. We were breaking those down. So every day I approach the market the exact same way. Every single day it's the exact same. Extremely systematic, right? Hold up. Let me throw my pit numbers up. Okay. Previous day high, low, open and close, right? So we're opening above previous day high. Previous day high is this blue line, EOD, green, gray. And then previous day low is this purple line, right? So we had all-time high, previous all-time high, which was right here. So basically, when I go into the day, I have the same approach every single day, and it's identify who's controlling the open. If we can understand who's controlling the open, we are either going to target EOD or we're going to target whatever upside target we have. In this scenario, it'd be pre-market high, and then we would use market structure to take our trade further, okay? And moving averages. Moving averages are key, right? So basically, market opens, and we get a very large sell-off immediately coming into previous day high, okay? Now, this seems pretty normal. Basically, what I'm watching for here, since we've had a moving average cross, is a green bar to get ignored. Now, let me throw up the 1 hour 9. Okay, it's a very important tool that we use to distinguish healthy and unhealthy trends on larger time frames. Notice how far away we are from the 1 hour here. Do I want to go short for a continuation trade here when I'm more than $1 away from the 1 hour 9? Probably not, right? The 1 hour 9 keeps me extremely grounded, right? If we're getting far away, that's what we call an extension. I want to be, it doesn't necessarily mean don't trade. Like Friday, we were extended and price just kept going. But what it does mean is just approach with a little bit more caution, okay? In this scenario, we're coming into previous day high. I'm not quite ready to go short, and we never got a GBI. Right? So this would be our green bar, and it didn't get ignored by the following candle. Therefore, there's really no trade for us. And for anybody that traded this day, you guys know it was complete chop. But that doesn't mean here, right? Like I got my box around this green candle. I'm trying to identify who's controlling this level, and this level was also the orb. Okay? So we actually did, let me see here. This would be the open range breakout right here, first for 15 minutes. And you can see we couldn't get any close below it. All right, it couldn't close outside of the orb. I did end up taking a short play on this candle right here because we were bouncing off the 20, and we did ignore the previous green candle. At that point, I'm willing to go short, put my stop above it. And I also liked the fact that sellers kept defending the top of this green bar right here, right? The top right here. So I ended up taking a short play and almost got stomped out right here. The 20 held. We started to get a little continuation here for about, what is this, like 50, maybe 75 cents. I was able to trim my position, leave one SPX contract on the table, where I ended up getting stomped out on this green candle right here. Okay, so once again, just not that good and fruitful price action. And I think it's important to say here, our edge, the three-step approach, didn't really present. And notice, price action was not fruitful. Okay, that's like a common thing you're going to hear from me, is if our edge doesn't show up, it's for a reason, right? It's like, it's funny what I'm starting to realize. If the edge doesn't present, I really don't want anything to do with the market. Garbage price action, no continuation. We come back up here. We get a moving average cross, but there was no RBI, so there's no trade. Okay, and then price finally falls back below. We get nothing. And then I finally end up getting back in the market short right here. Okay, I want to talk about why. So I got back in the market short when the market looked exactly like this. Now remember, every day my goal is to play the open to the upside or to the downside. Okay, now we have to figure out who's controlling the open. How do we do that? Our approach, but also with our moving averages. Notice the 1 hour 9 here. It keeps creeping below. Okay, notice we couldn't hold above the 50. We got this nice little trend line break here. If you want to look at it that way as well, these are just other tools that we use to identify opportunity. And we felt it, more of the story is I'm getting a green bar to get ignored on the 1 hour time frame after a moving average cross at a critical level. So once again, critical level, previous day high, moving average cross, green bar gets ignored. I'm in short, my stop's above, and I'm targeting EOD. Okay, you can see here, price is coming down, looks good, rallies up, doesn't stop me out, and then price rallies down where I ended up jumping out of this trade. It ended up turning out to be an okay trade, but more of the story is price action just really wasn't that fruitful. Hopped off the chart, and obviously you guys know how it goes. Once you hop off the chart, price rallies and gives you a great trade right here off the open. Shout out to anybody that caught that off the open. It was beautiful, absolute beautiful trade right here. Just blueprint. And just something I want to point out so that we can benefit from this is notice here, we're bouncing off the 1 hour moving average. We got a healthy 5-minute trend, okay? And we're at a critical level and our criteria is present. So once again, moving averages, critical levels, RBI, GBIs, beautiful long play right there. All right, now coming into Tuesday, right? So once again, we approach the market every day the exact same way. Extremely systematic. We pull the emotion out of the game. So we got our pit numbers. We got previous day high, we got end of day, and we have previous day low. Now, once again, based off what happens at the open, I'm going to look for opportunity, right? We got 3 jobs every day. Identify opportunity, execute the opportunity, and then manage the risk, okay? So let's see how we played out today, or this day. Notice again, where's the 1 hour 9? We're on it, okay? Every time you're at the 1 hour 9, that's extremely beneficial. Hold on, I just got a chat here. I want to make sure that I see this. And guys, remember, if anybody has anything they want to say, all you have to do is unhit your mute, and then we could dive into it. Let me see here. Never mind. I can't see it. I don't know where it is. All good. All right, so once again, what do we get? Well, the orb, okay? Check out the orb. First 15 minutes, we blow past it, okay? Now, another thing we get here, which is our super simple 3-step approach. Moving average cross. So yet again, when I get a moving average cross and the 1 hour 9 is right here, my call options are already pulled up, right? My options are pulled up and I'm going, listen, what's the moving averages look like? Is this trend healthy? Are we extended from the moving averages? Are we extended from the 9, right? All this, we're very condensed. Everything's exactly where I want it. I got my call options ready. This candle blows the top. Therefore, right here, I'm in the market long. My stop's going right below the red bar. We get a glorious move up to previous day open print, and then we almost hit EOD. I bought 2 SPX contracts here. First one scaled out. Why did I scale out right here? Look how far away we are from the moving average. We're about 60 cents, right? Now, yet again, it's good. Profit taking is extremely important regardless, okay? There's no perfect way to do it. Every trader's a little bit different. In my opinion, it really relies on your expectations, which is a whole nother conversation we can get into another day. But some traders like to make $200, $300, $400. Other traders like to make $2,000, $3,000, $4,000. Right? That's all based on what you're comfortable with. But the moral of the story is at least lock in a 1-to-1 or 1-to-2. Right? That's the most important. But yeah, we get a very nice rally up. Move the 1 hour we're kind of far away from. I scaled out. Price comes right back into the RBI. Now, and this is key. This is so key. If you guys take anything from this webinar, let it be that conditions are bullish until the red bar gets ignored, right? You can see, just look, price comes in. The sellers that got in here are getting stomped out right here, providing great movement here to the upside right here. Nice 5-minute candle, rallied up here and into EOD. We got out of the trade. And then price comes down. And then I end up going for a short play. And let me just verify here. Where are we at? Green bar. The low here, 61629. The low here, 61628. So look, we literally get a green bar to get ignored right here. I enter short and I get stopped out. And if I'm correct, Powell was hopping on the mic. I knew he was. Would I trade anything about this trade? Would I do it differently? No. Okay. It's at open print. I get that. But the 1 hour moving average was trending down. More often than not, this is going to continue, right? And it did. It just popped up and rallied up and snagged all that liquidity up there. And then price continued to cook down, right? So, yeah, took a loss right here. But as far as execution, this was exactly where I wanted it, okay? This is the way I like to get in and out of the market every single day. I'm not going to change it. Okay, when I take a losing trade, I'm not going to, oh man, next time I'll wait for the candle to close. No, we don't change things. We go, all right, what works most often? Let's keep doing it. Okay? So overall, it was really not that bad of a day. I really just wanted to go over the open. The later session was just really choppy, just extremely choppy. Ended up taking another long on this GBI right here. Got a pretty nice move into EOD. But one thing I want to point out, guys, is you got to be, what's the word? I don't want to say careful, but you have to be cognizant to the fact that these very large moves, right? When we get something like this very quickly, we're getting extended from moving averages. Anytime you're starting to get extended from moving averages, get ready for the pullback, okay? Pocket means pullback, right? That's one of my favorite sayings. Right here, you can see we are literally, let's see here, how far away? Yeah, 66, 70 cents, right? I always ask myself, am I willing to hold for the price to come back to that moving average, right? And if I am, I'll hold it. If not, you should be getting out of the trade, okay? Regardless of how much you're up, you could always bet on the fact that you're going to get the pullback to the moving average. But the orb, in my opinion, was definitely successful this day. It definitely helped add to the conviction with trading with buyers, right? So this was definitely a successful orb day for Tuesday. And it's going to be really good once we get all that orb information implemented into the data reports, because it's going to help on days like Friday for us to pull the trigger when there's no specific RBI, GBI, or when we're super far away from the 9, right? And that's really the goal, is to, get another tool to help us confidently enter into very dominant trends. Dude, Wednesday was flawless. This day right here, and this is the funny thing, right? Like, in terms of consistency, I made more money Wednesday than I did every other day put together. And that's just how trading works, right? Like, this is why it's so important to allow certain trades and winners to run. That's why the moving average concepts we go over, the healthy trends, right? Like learning to understand those is going to really help you, because I was able to buy 2 SPX contracts initially, right? I'll show you guys. My first entry was right here, okay? And once again, what I'm doing is I'm like, all right, we're below the 1 hour 9, but we're seeing buying pressure come into it, okay? And to be completely honest, I got to show you the SPX chart, because that's what really gave me the conviction to enter this quick. So if I whip out the SPX chart, you're going to notice a trend line here, okay? Now, I don't use trend lines often, but they're not a bad tool, right? Check this out. So SPX here, you'll notice we are opening below the trend. We get a nice red candle here at the open, and it looks pretty bearish right here, right? We could go, all right, this looks like sellers are in control. Now on the SPY chart, I'm going, okay, we might get a moving average cross. Let's see what the next candle brings. Large bull 180, as Todd calls it, right? Very strong green candle wiping out these sellers right here. So I'm like, oh, that's actually really bullish. I was like, if I get a red bar to get ignored, that's what I'm going to call, quote, buying acceptance, okay? Now, buying acceptance is just a pretty way to say, hey, sellers should be here, but buyers are showing more strength, okay? So we get a red bar, gets ignored, and we get the moving average cross. I'm in long. I initially buy 2 SPX contracts, and I'm looking to, and the market looks like this, and I'm looking to target previous day high, which was right, I think it was, hold on. Yeah, it was right here. And then I'm looking to target this 6215 level, which on SPX is a glorious move, well over 100%. So I'm like, all right, let's see what we get. And this is the most important part, guys. Like, anyone could look at this trade in hindsight and be like, oh yeah, just follow the strategy. But what we got to look at is, what about this can we use on Monday, right? What can we see on this chart that's going to help us identify opportunity Monday and execute the way we're supposed to? And it's the moving averages, okay? Look at where the 5 is. The 9 DEMA on the 5-minute time frame. We're right on price. This is very healthy. If we were getting extended, like something like this, like you guys see this chart on the right. You see how far away price got right here, and then what happened? It sucked right back up. So you got to ask yourself, sellers might be here right now on the chart on the right, but look how far away we are from the moving average. Okay, that's unhealthy. We don't like unhealthy trends, especially in terms of continuation. So we see the gap, we see the extension, so we don't get in. So on the contrary, when we don't see a gap, we don't see extensions, we can go, all right, this is pretty healthy. All right, I need to identify an entry. There it is. I'm in the market long, 2 cons, and I'm going, all right, boom. We get another red bar to get ignored. So right here, I'm now entering in 1 more contract. Now look at SPX. Look at it, goes up to the trend. It goes up to end of day right here. We get a little bit of selling. And then price sells off, comes into open print, and then we get an RBI. So what are we seeing right here? We're seeing a bearish trend retest, but buyers are showing up. Price literally rallies into it, okay? Red bar gets ignored. We're in the market long, adding into the position. Does this chart on the right look bearish anymore? Absolutely not. This is extremely bullish. And the way I'm looking at it is, this thing's going to pop right up to previous day high, which it pretty much did. We didn't get 1 red candle. Thing just rallied. And look at the trend here. Like, it's so beautiful, because once you start seeing these sort of things, it makes it a lot easier to hold your positions the way you're supposed to. My first target was here at 61810. I trimmed 1 con here. Price rallied up. I trimmed another con as we got to 61858. And then my last con at previous day high, where I locked in about 80% ROI. So just a beautiful move right here. Picture perfect. And let's check out that orb. Let's see how the orb performed. So yeah, look at that. Look at this. Closing outside of the orb with an RBI, that is extremely bullish. Okay? So once again, the orb is a great tool if that's something that, but how do I want to say this? Don't only wait for the orb. You know what I'm saying? Like, the orb's a great tool, yeah, but I'm not going to wait for it to always close outside of it. And this is why we're still collecting more data on it. If that makes you feel better to wait, absolutely do it. Because at the end of the day, it's about how you feel comfortable executing. But we got to be careful, because if we go back to this day, if you waited for this candle to close outside the orb, look how far away you got from the moving average. So, you know what I'm saying? You gotta find that happy medium, and that's why I rely a lot more on my moving averages to help me understand the healthiness of the trend and etc. Right? So, here we go. Let me check the chat here. Let me see what's in here. We're getting. Oh yeah, that's all right. You're good. You're good, Roderick. Do you always add if we get a second RBI? No, I don't. Phenomenal question. So Roderick asked, do you always add if we get a second RBI or GBI if you're in a trade? So I don't. The reason why I did here is because my confidence in the fact that if buyers held this, it was really all off the SPX chart, right? Because if you look at the SPX chart, sellers really needed to defend EOD for a further move down. Now, I've been collecting data on the market imbalance for the last 5-6 years, which basically means the imbalance in between end of day in previous day high, right? And then end of day in previous day low, right? This is what we would call the market imbalance. The bullish imbalance up or bearish imbalance down. Now, the reason why I have so much conviction in the fact that if buyers hold the open in the EOD, there's a 88% chance, which is almost 9 out of 10, that price is going to rally up to previous day high. It's just a matter of how and when. So to answer your question, I don't always add in, but if the conditions and the context is what it was on Wednesday, I'm going to. The RBI happened right at 1 hour 9 DEMA. It happened right off open print. There was just so many good things about this trade where I was willing to then add into the risk and add into the hedge, or you should say. So that's why I was willing to put into it. It's always a matter of how healthy the trend is and what the story is. And in this case, this was picture perfect in my mind. And you can look, once sellers couldn't hold the OD, we rallied right up to previous day high. And that was actually my last trade for the week. I was done. That was it. Friday I want to talk about though, because Friday there was a lot of opportunity. I just didn't pull the trigger, and this is actually a really good thing to talk about. There's no moving average cross. Okay, so basically there was no quote entry for me. Now this is something I want to talk about, because just because there's not a moving average cross doesn't mean there's no opportunity. Now, this is going to change though, right? Because every trader's at different journeys, right? If you're a brand new trader and you haven't proved out consistency, I would be only trading the 3-step approach until you lock in a month, right? Lock in a month, lock in 2 months. And then you can start to look at price action in a different way where you may not need the moving average cross. Now, this is also why I am starting to look into the orb more, right? Because Friday, look at the RBIs we had Friday. It was beautiful. Look at this. Our red bar ignored, boom. Red bar ignored, boom. Red bar ignored, boom. Red bar ignored. We literally had, 4 of them? 3 of them, right? 1, 2, 3. So the biggest thing I want to point out here, though, and the reason why I didn't enter into anything, is we were very extended from the 1 hour 9. Now, this is in trading, there's never a binary black and white answer, is there? Right? It's always a matter of context. There was a lot going into this day that I should have paid more attention to. Number one was that we were trading all-time high, right? We're way above all-time high. We're gapping up like crazy. Number two is the orb. The orb, we closed outside the orb. which would have given us a beautiful long entry. Now, if I'd have got in long there, my stop loss just would have been below the current candle I got in, or an appropriate 30%, right? Which is something I'm just not used to. I'm so programmed out to only trade RBI, GBI. So even if you'd have waited for this one and then been like, oh, well, we closed outside the orb, this is buying acceptance, let's take it. It just, none of it really sat well with me. And the moral of the story, though, guys, is like, that's okay. Like, I feel like we put way too much pressure on ourselves to be green for the day, right? You guys always hear me in my videos. Like, it's not about being green today. It's about being green at the end of the month in the year. So, like, if you sit this day out because there's no moving average cross, but the moving average cross is what keeps you consistent, then you did the right thing. Like, regardless, oh, it rallied all day. Somebody on IG posted, they made $100,000. I made nothing. I'm a piece of shit. No, dude. It's your journey. You have to ask yourself where you are in it, and you have to ask yourself what's working. Like, the main reason we started HPT was to identify criteria that's working and repeat it. So, like, yeah, we didn't get the moving average cross. We didn't get the traditional 3-step approach, and that makes sense because it presents itself 80 to 88% of the time, right? So, like, there's going to be days it doesn't present. This was one of them. Now, we didn't trade. I didn't capitalize on any of this. It was just so extended from the 1 hour 9. Does that mean come Monday, it's going to do the same thing? Absolutely not. Or maybe. But what I do know is more often than not, my best trades come off the 1 hour, right? So am I going to change anything? No. Am I going to let this cause me to change my behavior come Monday? No. I'm still going to trade the exact same way. I'm going to follow the rules and the principles that help me maintain consistency. Now, with all that being said, anybody that capitalized on this, good for you. You killed it. This was a great day. And one thing I want to point out is ORB was successful, and so was the 5-minute trend. Look at how healthy it was. You guys probably see me in the chat. I'm like, dude, 5-minute trend's healthy. She's most likely going to continue. What I want to also point out is here, notice we're below the 9, okay? But it's not bearish. So when you do find an RBI like right here, there's a very high chance that once you get back above this 9, you're going to get a nice push. It's exactly what we got, right? The moving averages are like moving magnets, okay? Price is going to try to continue and suck back up into it, especially when the market was in the conditions that it was. I mean, this thing was just cooking. This was just straight cook. I just remember looking at the SPX chart, and in my mind, I just couldn't stop thinking that it was going to reverse. And anytime I'm not seeing things clearly like that, I got to step away. I got to. It's not a matter of, oh, let's make money today. It's a matter of what Mark Douglas said it the best. He said, it's not what you're doing, it's what you're thinking about when you're doing it. Because what you're thinking about when you're doing it, that's what you're going to repeat come Monday. So, all in all, it's a really good week. It's a phenomenal week. One thing I want to point out is this trade on Wednesday was literally, like I told you guys, I made more money this day than any other day. That's the importance of letting these trades run, right? Like, I know this is a big issue most traders deal with, is holding on to positions. It's so damn important. And this is why we got to be using on demand. We got to be practicing, and we got to get familiar with what these healthy trends look like, right? Healthy 1 hour trend, moving average on the 5-minute, right? We don't want extensions. And obviously, just more reps you get in, the better it's going to be. But all in all, it was a great, great week. I could have done a lot better. I feel like I could have maybe done a little bit better, with taking profits, on Monday, right? Definitely could have locked it in. Once again, you can always do better. Focus on your strengths. I think we did great with execution. I think our discipline was exactly where it needed to be. It was on point. So going into this week, that's exactly what I'm going to keep doing. I'm going to keep trading the approach. I'm going to stay super aware of where the 1 hour 9 is. And guys, I mean, look, the market is just rallying. Look at this. We are just cooking. This doesn't mean it's going to go up on Monday.